this business is not a business that you could just come in and be like, I know everything.
Yeah, you don't clock in, clock out.
I always tell them what we do isn't rocket science. You don't have to be the smartest person in the world to do what I do, but you have to be honest. You have to be upfront. You have to be transparent. All of the qualities, those qualities that I'm looking for, you have to embody those. You're not going to get very far in this business if you're not those things. We want to look at our clients and really, really delve into what they're trying to do and help walk them through all of that as smoothly and easily as possible. Times are tough right now in our world with the rates where they are, the inventory levels where they are. There's not a lot of deals to go around. There's some tough times ahead. It's kind of like we need each other. Every good realtor has a good lender that they work with that they could call on a Sunday at 6 p.m. or on a Christmas Day or whatever. If you're not teachable in your line of work or in mine, you're not going to succeed.
Welcome to the podcast. I've got my buddy Sly here with me today. He's my go-to lender. I've used you personally for my own homes.
Yep.
I think you're one of the biggest lenders in the Midwest, or at least that's what I tell people.
Yep.
You know, whether you're humble or you want to share that or not. Yeah, I remember when I first started, it was just you and your assistant. Now It's like you and a whole team, which we'll talk about a little later. I can keep going over and over again, but yeah, welcome Sly. And do me a favor, just tell us a little bit about yourself and whatever you want to share.
Yeah, for sure. Thanks, Elliot. Appreciate the vote of confidence and happy to work with you and your buyers. So yeah, my name is Sly Marinka. I'm with Cross Country Mortgage. I'm a branch manager in Antioch. I have an office in McHenry and a satellite in Lindenhurst. We do have a whole team of mortgage professionals that get the job done and get it from point A to point B as efficiently as possible. We pride ourselves in service. We're always available. So you know, we take care of clients, whether it's on nights, weekends. I've talked to Elliot before at 9 o'clock on a Sunday night. Love doing it. No problems there whatsoever. So real happy to partner with Elliot and his clients and look forward to our podcast.
What made you get started in the real estate lending space, if you will?
So total fluke. I had no idea what I was graduated. So I graduated from college in 2002. I had a finance degree. And my goal in life was to trade stocks.
Oh, really?
I loved Wall Street and really got into it during the dot-com phase in the late 90s, early 2000s. And I thought my path was cut out for me. I had applied for an internship with a company that did that. And then the dot-com bubble burst. And right when I'm getting out of college, all those jobs had dried up. So I was actually working at a ski and patio shop in Highland Park. That's still there, Williams Ski and Patio, great place. And a client came in and I helped her with her patio furniture needs. And she said, "You're going to come work for me." I was like, "What do you do?" And she said she did mortgages. So literally a fluke. I was recruited by one of the top loan officers in the country. She's still my mentor today. I talk to her almost every day. She works for Cross Country as well. Just really awesome lady. And she recruited me. I went in for an interview. I took the job and just hit the ground running. I got to learn from the best.
And what year was that?
So this would have been 2002.
2002, okay.
Yep, so 21 years.
Okay. You say .com, like, I just think of like somewhere in the late 90s, early 2000s.
Yep.
Right. I don't know too much about the .com boom, sadly, but I know what it was, but I don't know anything about it. Even the housing market crisis, I just watched The Big Short like 4 days ago.
Oh, yeah.
I knew about it, but I didn't know the details about it. So
yeah, we lived through that, man.
Yeah,
man. Yeah, the .com bubble was, all these .com stocks took off, and it was like the world, was ending because the markets were going crazy and everybody was making all this money. And then just like that, it just collapsed.
So then in your first year, if you don't, I don't know if you're willing to share this or not, how many loans did you process by yourself? Like, I know you were on a team. I don't really know how that worked, but what did that look like on day one? And then fast forward to this year.
Yep.
Do you mind sharing how many you personally did? And then now you got your entire team on top of that. What does that look like? Just to give people a perspective of like how big your operation is.
Yeah, no problem. So yeah, year one was basically an assistant. I really didn't do my own production. It took a little while to get going.
I see.
But basically I was privy to all of the loans that Beth was doing, my mentor. So I got to sit in a cubicle with her side by side and literally listen to her, the way she talked to her clients, and then whatever it took to get the job done, I just whatever it took. So I would, regularly go meet with her clients. At that time, you didn't have to have a license. That was a difference. So anybody could do loans.
Oh, I didn't know that.
So there was no licensing requirements whatsoever, but I was just her assistant.
Gotcha.
Learning. And as I learned, I was at the age, I was, 22, 23 years old. And some of my buddies started wanting to buy homes. So I was able to take the knowledge I gained from her and her clients and help one buddy buy a house, then the next one, then the next one. And I realized it was something I really, really enjoyed doing. I enjoyed, helping these people because, like my buddies would go to their banks or whatever, and the banks would be like, oh, sorry, you don't have good credit or whatever. And I was able to figure out different programs and kind of walk them through that. And they're like, wow, this is really amazing. And they started referring me to their friends and guys at work. And so it really just kind of took off. So year one, as an assistant, I want to say I closed maybe 30 or 40 loans, which was still a lot for back then, but it was also refi boom time. Because that was the first time rates had come below 7% in a long time. So everybody needed to refinance. So I was able to help some of my parents' friends and help some of some other people with refis as well. And then I started sending out refinance mailers, and that's what really took off because the rates kept coming down. So I would get somebody at 6.75%. 6 months later, it'd be 6.25%. 6 months later, it'd be 5.5%. So I was really able to help a bunch of people kind of climb down and just continually better their situation, pay less interest, switch from 30 years to 15 years. So it was really a crazy time in our industry. I mean, I remember it felt like the boiler room. Like you'd walk in there and there's paper everywhere and people calling. And I mean, it was insane when I first started, but I got to learn. I got to see lots and lots of different scenarios. And, but one of the differences with the way I was taught was we always focused on the purchase business. So my mentor said, listen, refinances are great and we could do refinances as long as the rates are low, but what happens when the rates go up?
Right.
And so I've seen a lot of people come and go in this line of work that...
We're seeing that now, aren't we?
Absolutely. Right. People are dropping out of the business and getting jobs because there are no refis. So now it's just the purchase business and it's a different animal. There are two different types of deals. Obviously when you're refinancing, there's no attorneys involved. There's no realtors involved. It's just you and the client. On a purchase, you have to have a totally different mindset because we are working with real estate agents on the buyer side and the seller side. We're working with attorneys in Illinois, not in Wisconsin. We're working with title companies. It's just a little bit different, process. So basically, after working under Beth for about 2 years, it was time for me to kind of go on my own with her blessing. She was able to find an awesome assistant to take my spot, who's still with her today. She's amazing. But basically, it was time for me to go on my own. And I did. And I hit the ground running and I would network and I was that annoying kid that would just, relentless. I wouldn't take no for an answer. I got thrown out of real estate offices. I got... I knew I had nothing else to fall back on.
Right.
So
and that was a tough time, right? Because this was, that would have been 2012.
So this would have been 2002 till about 20. So in 2004 is kind of when I went on my own.
That's what I meant. Sorry. I'm thinking, you said you were 22. I just did the math on my age because we're like 10 years.
Yes.
It doesn't even feel like it.
Yep.
So then that was, okay. That was still when the...
Still going crazy.
Still
gangbusters.
Going up, right.
Gangbusters. And it just kept getting, to go into the next phase, it was like... There were so many programs for anybody could get a loan back then. And it just kept getting crazier and crazier. We would literally have reps come into our office that would be, we're down to a 540 credit score with no money down and no income verification. And then 2 weeks later, a different one would come in and be like, well, we could do a 520 with, and we're just like, what is going on now? That part of the business, that was the whole, the crash was caused by these subprime mortgages that these investors were offering. And it was almost like, they were just racing to the bottom, who could do the worst loan.
Right.
And I just remember thinking, man, this is nuts. Like these people, they're getting themselves into these situations. And we didn't do a lot of that in our area. But there was some, and I do remember thinking, man, this is crazy. This can't last. And then sure enough, '08 hit. And, again, talk about part of The Big Short. So the company I was working for at the time was one of the contributors to all of that.
Really?
Because I was American Home Mortgage. They went belly up, and they were part of causing some of that ruckus and packaging these loans into A-paper loans that really weren't A-paper loans. And so it was funny. My wife and I got her a job as well. So she was a processor for a while for Beth, the same lady. And I remember we were at Fat Man's watching volleyball. She was playing volleyball, and on the ticker, there was TVs up above, and on the ticker below, it must have been, whatever news channel or business channel or whatever, I saw a thing go by that said AHM Holdings files for bankruptcy. And I'm like, AHM Holdings? Is that American Home Mortgage? Because that was the company we worked for.
Right.
And sure enough, I called Beth at the time, and she's like, dude, we have to find somewhere to go, because they literally overnight shut down. The feds came in and they ran out of money, and the feds came in and shut the whole thing down. And
so you found out from TV before your company? Oh, geez.
Literally on a ticker, watching my wife play volleyball.
That's
AHM
rough.
Holdings. So needless to say, that night she finished her game. We packed up. We went to get our personal things out of the office, and had to find another place to work. So both of us, but we were part of a big team. We were part of a good group that had a desirable business model where we were, viable, and we were going to still be around. So, we kind of had our pick of where we would go.
That's good.
And we all found jobs, literally the next day we were hired by one of the previous competitors, and we stayed there for a while. But yeah, it was crazy times. How many big lenders went out of business during that time. And we're not seeing that now, per se, but there are some rumblings that some lenders are kind of on the rocks. Financially, if they didn't, cut their costs, if they didn't, times are tough right now,
right.
In our world, with the rates where they are and the inventory levels where they are. There's not a lot of deals to go around. And if lenders on a grand scale didn't scale back, there's some tough times ahead. So we'll see where that leads, and which lenders, kind of don't end up making it through this. But there are some rumblings in our industry. In fact, the company that I worked for, Finance of America, I was there for 11 years.
Yeah.
They got out of the mortgage business.
Oh, are you serious?
They got out of they're only doing reverse mortgages, not forward mortgages.
Gotcha. So,
that was the number 16 lender, I want to say, in volume in 2021, and they're not even doing loans anymore. Kind of sketchy. Yeah. So, but anywho, yeah. So, I worked, I went off on my own, and then basically during that time, from '04 to '08, I really concentrated on developing relationships with real estate agents. That's kind of how I was taught who I would go after. And it's kind of like we need each other. Right. Every good realtor has a good lender that they work with that they could call on a Sunday at 6 p.m. or on a Christmas Day or whatever. So I really focused on building relationships with people I wanted to work with, and just solidifying those. Then obviously the crash happened in '08, and those next couple of years were really, really rough. It reminds me a little bit of now, minus the bad loans. Volume dried up until the prices got so low that investors started coming in and scooping up these foreclosures. I remember, investors buying homes for $30,000-$40,000. Yeah. And I'm just like, holy cow, I can't believe the prices are that. That's just nuts. That's a car. That's,
yeah,
30 grand for a house. And I had investors that just started jumping in and buying them in bulk and working with investors on a lot of foreclosures. And then things kind of chilled out a little bit. Say around 2011, 2012, things kind of started getting back a little bit to what we were, used to. Not as gangbusters as it was before, but, started kind of leveling out a little bit. And then I just continued, working basically just myself and my assistant, Melissa. And then in 2019, I was approached by a friend basically that was kind of interested in getting involved in real estate. And I said, sure, come on in. I'll be happy to talk to you and show you kind of what real estate looks like. And he wanted to be a realtor, and I was going to put him in touch with another agent, but he wanted to meet with me first. And we did that. And in that conversation, he kind of realized that real estate is, so like I work on the weekends and the nights, but I do it from home.
Right.
Like I don't, like you guys, you're the ones. And that's why like I don't care when you call it. Like I'm happy, but I know you're the one that's out there on Sunday showing houses, on Saturday in the evenings. So once I kind of explained that to him, he's like, well, I'd rather just do what you do.
Right.
And I'm like, okay, well, let's look at what that looks like. And so that was my first loan officer hire. That I'd had other people previous that were corporate people that were on my team, but he was my first kind of like protege. And during that time, it was just like so many people were looking for jobs. So I just started scaling up and hiring good people that want to learn. This business is not a business that you could just come in and be like, I know everything.
Yeah, you don't clock in, clock out.
And I'm 21 years in, and I don't know most of it. I know a lot, but I don't know everything. Right. And I never will know everything. I'm always eager to learn new programs, guidelines changing, just different ways that the business works. Now with all this AI stuff coming in, we have to be students. Yeah. And so it's just tough. Like you in your world, things change. You got to adapt. And that's kind of where, I've been able to kind of show people how I learned and what made my business take off and my success, and kind of have them duplicate that in their own realm,
right?
How they want to do it, but the keys are you have to be teachable. We have all kinds of training all the time. We have all kinds of, different things that we need to know to be successful. And if you're not teachable in your line of work or in mine, you're not going to succeed. And I have struck out on, I've had a couple employees that didn't pan out for one reason or another. And I put a lot of time and effort into trying to, help them and get them where they need to be. And, sometimes it just doesn't work out.
That's a horrible feeling.
It is. It is.
Yeah. I hear it from Paige all the time at the salon. Yeah. She'll be 3 months into something and I'm like, yeah, that person, it's rare, but I see the heartbreak,
right.
And I look at it, I don't know hair, but in your world, I can kind of relate. And I'm like, dude, that sucks.
Yeah. It's no fun. But for the few that didn't pan out, I've built a team now where, we have 8 loan officers that are doing okay, doing good. A couple of them are superstars, rock stars, going to be, long careers in the mortgage business, top producers. Incomes, skyrocketing. So those are the success stories. And, I always tell them what we do isn't rocket science. You don't have to be the smartest person in the world to do what I do, but you have to be honest. You have to be upfront. You have to be transparent. All of the qualities that when I'm buying something from somebody, those qualities that I'm looking for, you have to embody those. And you have to be the same thing, because you're not going to get very far in this business if you're not those things. So, critical to make sure people know what they're getting themselves into, to have a conversation that's not just numbers. And it's not like we want to look at our clients and really, really delve into what they're trying to do.
Yeah.
And help walk them through all of that as smoothly and easily as possible.
And people don't do that in so many different spaces.
I don't want to obviously badmouth anybody, but the point is, I want to be able, like, if someone's coming into a team,
right,
they have to mesh, they have to fit in, and we worked very closely together, day in, day out. I rely on my people, they rely on me. If they call, I answer. If I call, they answer. But if you have someone that comes in with kind of like a different attitude where it's like me, mm-hmm. that throws a kink in everything for everybody.
Well, even if it's not just me, there's people, for example, I worked with an attorney before, won't say who it is, real nice lady, but she's got a specific personality that I know I cannot put this type of personality to work with them together.
Yep.
This person's more stern. It's like, hey, listen, like, I'm just going to tell it to you transparently, but there's no chairside manner.
Right.
But she's great. The assistant is such a like, I'm just like, no. Listen, like, you're not my go-to because your assistant's a nightmare.
Right.
So, and it's like my feedback, like, hey, listen, the attorney's cool, but I'm being pawned off to the assistant for certain conversations and I don't like the vibe. and then it makes me look bad.
Yeah. So that's the whole key in building a good, a good operation is everybody understanding that the customer comes first, no matter what. In this space, you're my customer just as much as the client that's applying for the loan is my customer. So my people know that we treat our agents with utmost respect. We answer the call when they do call. We answer. We reply to emails right away. We're always pleasant. You work with Melissa quite a bit. She's my She's my assistant and processor. She's been with me the longest. And one of the best things I like about her is how delicate she is with our clients.
Yeah,
I have had attorneys that have been so rude to her, and I want to jump in and be like, listen here, man, you're messing with the wrong chick, and she will just kill them with kindness. And because of that, she's gotten a reputation working for me or under me as one of the best in the business. And she truly is, but it's that bedside manner you're talking about. Right. She understands. Maybe someone's having a rough day. Okay, let's give them the benefit of the doubt.
I like that.
And she does that every single time. So
it's your reputation on top of that too. So which makes sense. Well, let me ask you this real quick. Like this whole thing just opened up to like 9 different questions.
Yep.
And if I ask you this question, we're not going to touch on any of this. So I bought a house with you, refinanced with you.
Yep.
For people watching this, what does that process look like? Because at the end of the day, I know how we work together behind the scenes.
Yep.
And I've only worked with you one time in the scenes, but I don't know if it's because we're buddy-buddy or just like we got such a good vibe that I don't know if I did what I was supposed to do or not supposed to do. I don't know what the true part of the process was and what was, I know Elliot, I know this is what he wants to do. Does that make sense?
Yeah.
Like with your whole team, what does that look like? John Doe comes in, I give you a referral and I'm like, hey, listen, get pre-approved. What does that look like behind the scenes so people will actually understand, I need this, I need that, and here's why. Because what I do is I say, hey, listen, like call Sly. He's a great guy. His team's good. He'll take care of you. And then when I call a day later, hey, how was Sly? I know he's great, but my reputation's on the line just as much as yours. I just want to know, like, was it a good vibe? Was it not a good vibe? Oh, he's great. They took care of everything. Old sales tactic from me. Once I hear it's good, I'm like, great, I'll drop it. Let's move on. But even to this day, like when you talk about all this stuff, I have no clue what happens. And can you give us an insight of what that looks like? Or is that just your bread and butter and you don't want your competition to know?
No. There's no surprises. There's no secrets. And again, it's from my training in how to listen. So we listen to our clients. When someone calls, I try to get the big picture and I know what questions to ask to get as detailed of what we're trying to do, whether it's, if they're buying a house or even if they're refinancing. I want to understand what the client wants out of this. And typically in that scenario, you said, John Doe, you refer them to me. I'm going to have a very detailed conversation with him. I'm going to explain to him that, hey, we're going to be very thorough up front. I don't want any surprises. So some of the questions I might ask up front, you'll be like, well, that doesn't apply to me. Great. We're happy that it doesn't apply to you. But nevertheless, I've been doing this long enough to know that you can't leave any stone unturned.
Yep.
Because if you do that, that's the one time that something comes back. And the worst thing that in my space that can happen is I give you I tell you your buyer's good to go. I give you a pre-approval letter that has my name written on it. You go out there, you spend 3 weekends in a row showing them houses, get under contract, beat out all these other offers, and then it doesn't get to closing. I can't have that.
Right.
So I'm going to explain to the client up front that we're going to be extremely thorough. We have to gather your financial information. We're going to do a very deep dive into that. We're going to do a debt to income ratio analysis. We're going to run a credit report. We're going to go over that credit report. And by doing all of that up front, we're going to alleviate a lot of problems later. And clients like that. They're willing to, if you ask a client for something, they're willing to do it up front. What they don't like is if I don't ask all of these questions now, and then later on it comes up and they're like, well, why didn't you ask that from the beginning?
Yeah.
So that's why, and I train my loan officers and all of my employees to be extremely thorough up front. Now, can things happen? Yes. I've had clients lose jobs. I've had clients during the process lose jobs. I've had clients pass away during the process. I've had People decide we're going to get divorced during the process. I mean, you name it.
That's rough.
We've had these scenarios come up, so it's not always 100% foolproof. If someone loses their job, then they can't afford the payment anymore. I get it. That's life. It happens. I'm terribly sorry that it happened, but if we're doing our due diligence up front and being thorough, that's 99% of the time that's going to alleviate a lot of problems going forward. So we have that conversation. We do the work. We check their income. And especially in this day and age, it's so nice to be able to do everything electronically.
Yeah.
Dude. Before it would be like, oh, let me fax your, when I first started, it would be like, let me fax your HR department an employment form.
Yeah.
And it's like, good luck getting that thing back, within a week. Now we click a button usually, and a lot of big employers, not all of them, but a lot of big employers, within 10 seconds, I have their employment history, their start date, their exact pay, bonuses, commissions, all printed out on a nice form for me. So it's not a lot of extra work to do that. And then I could do my calculations and get the averages. And, because a lot of times what we find is people don't know how much money they make. Like, it's
we don't
nuts.
know how much money we make.
They don't know how much, and it's like, let's get the, I'm not just going to take your word for it. I believe you, but I'm also going to do my due diligence and double check and make sure. So we're very thorough up front. Once we give you the green light, we turn that client back over to the realtor. Here's their pre-approval letter. But I also like to make sure that I work very closely with the agents that use us, in that they don't always want a blanket pre-approval letter. They might want one specific for the offer that they're writing. So everybody has my cell phone number. I could do it right from my phone no matter where I'm at. My assistant's always available if I'm not for whatever reason. So that's one of the nice, things about working with us as well. And you've had it before too, where you need a pre-approval letter on a Sunday and they got pre-approved at their bank and the bank's not open.
You're right. Yeah. That's the worst.
Yeah. We don't roll like that, man. We just, whatever you need, we are here, able to get it to you, at a moment's notice. So once we have that pre-approval letter out, or we tell you what they're good for, you then take over and you do the hard part. My job is relatively easy, where I'm just making sure that everything lines up. Then you have to do the human part of it, which is find the house.
Right.
So, you take them out, you show them houses, and, hopefully they find something relatively quickly. They get under contract. Once they get that contract back, that's when they come to us. That's when we talk about locking in their interest rate, or if they want to float, they have that option as well. We send out the formal loan application with the parameters from the contract on it. They sign everything typically electronically. We do meet in person too. In fact, this week I had two clients that wanted to meet in person to fill out their paperwork because they weren't comfortable doing it via email. No problem whatsoever. Yeah, no problem whatsoever. One of them had an AOL email, by the way. So
that explains
I'm
a
like,
lot. Yep.
AOL hasn't been around for a while, but their email is still around. But so anywho, we get together, or we do it electronically. They sign everything, upload their documentation, or we gather their documentation, whatever is needed that needs to be updated. So for instance, if we got bank statements 2 months ago, those are no longer good. We need those updated. Pay stubs are only good for 30 days. So we'll need some updated documentation. We take that all, I send it over to my processor, Melissa, and that's when she does her thing and orders all the things that, all the additional reports and additional verifications we need behind the scenes. We get that over to our underwriter. That's the other awesome thing about working with like a team like ours, is we have our go-to underwriter. Regina's been with us since 2020, so 3 years now. And she reviews almost every one of our loans. And we have in fact, I was talking to her in the parking lot about a file before I walked in here. And not a lot of lenders have that. I remember I always wanted to aspire to do enough volume to have my own underwriter. That's like the holy grail, where it's like your stuff doesn't wait in line. It's not being underwritten in Florida or Arizona. It's like we have our own person. They look at them. I could call her and say, hey, this is a rush. This one has to close really quickly. Can we move it to the front of the line? she's willing to drop what she's doing for us.
So she's on your salary, like she's on your payroll?
She was when we were at Finance of America.
Okay.
Cross Country does it a little bit different.
Okay.
Cross Country is she's not. She's under corporate's payroll, but I have to pay a set dollar amount for every loan that she underwrites.
Okay.
That goes to corporate, though. That doesn't go to her.
Gotcha.
So they do it a little bit different. Every company's different. So at Finance of America, she was literally on my P&L, where I paid the salary, I paid the benefits. Here, it's done a little bit different. It's cheaper to do it that way. I would rather have it that way, but Cross Country doesn't allow that.
Okay.
So it is what it is, but she's still our dedicated underwriter. So I could pick up the phone right now and call her and say, hey, Regina, can you help me with this? And she's awesome. She's a fantastic underwriter, very, very smart, gets it done every single time. And I can't tell you how many times she saved the day where, something changes last minute and the client decides to go out and open a new credit card, or something comes up, or buy a car or whatever, something comes up last minute and they're sitting at the closing table or right before the closing, and it's got to go back to underwriting. Most places, guess what? You're not closing tomorrow. You're moving your closing back 3 days.
So real quick, like explain to me like I'm sick. You ever watch The Office?
Yep.
All right, explain it to me like I'm 5 or 6 or whatever Oscar says to Michael. Let's just say Chase, big bank, right?
Yep.
Would a company like that have their own underwriter?
So I worked at Bank of America before, so I can
right,
give
okay.
you my experience in working at Bank of America.
Yeah.
When I worked at Bank of America, my loans would go into a processing queue. The processor could be in Dallas,
Ohio or
Texas.
something. Okay.
It could be in Delaware. Like, there was a queue, and the processor would grab it, and then the processor would send it to the underwriting team. Now, the underwriting team was either, at that time, it was Pensacola, Florida, and I don't remember the other state it was in. Zero rapport with the underwriters. Like, we were not able to just call an underwriter and say, hey, this is what's going on with this file. It wasn't like that.
Mm-hmm.
It was basically, it would sit on in the underwriting queue. A human being would pick up the file, go through it, and my experience was, if they found one little thing that they didn't like, close the file, send it back to processing.
Oh,
and then it would take 2 or 3 days for the processor to say, hey, Sly, they reviewed this file, but we're missing this, or they want an explanation on this. So then I would work with the client, get what they needed, send it back to the processor. It would sit on her desk for 2 or 3 days. Then it would go back to the underwriting queue. It would sit on their desk for 2 or 3 days. Potentially a different underwriter would pick up the loan and review it. And if they didn't like something, close it, put it back. Or in a lot of cases, they would approve it. But there was just so much time in between when I would send it in and we would get the approval that it wasn't a way to do business. I would like lose sleep over this because, I'd have a closing a week out and the file had been in underwriting for 3 weeks, and is it going to close? Is it not going to close? And my reputation is very important to me. If I say it's going to get done, I want to make sure that that happens. Right. And so my experience was, it was very difficult. And I'm not knocking on Bank of America. That's just how they did it.
That's how they do it, yeah.
And there are some people that have great success working at Bank of America. For me, it wasn't a good fit.
So is that why they, like, let's just say them, or I've worked with Chase before, I've worked with a bunch of different people. Is that why they say they need 35 days or 40 days because of that lag time?
Typically, yeah.
That's what it is?
Yeah. Typically, their turn times are going to be, because they don't have that luxury, most of them. Now, don't get me wrong. There are some people at Chase that have their own underwriters. If they do enough volume, if they, turn in enough loans, and it makes sense. I'm sure, there are situations where, you are going to have a good experience. Just for me, it wasn't. Gotcha. And even after I worked at Bank of America, I didn't do enough volume to have my own underwriter. But over time, I was able to develop relationships with certain people, at my company, and get a little bit of preferential service. I started doing more volume, and eventually got to the point where it made sense for us to have our own. And so we did. And oh man, it's just such a different experience. Knowing that I could call the person that's the one that's going to approve the loans. And I call her all the time about, scenarios and different situations. And hey, how would you handle this? I have a client right now that broke his leg at work. He didn't work for 3 months. And so his year-to-date pay looks pretty sketchy compared to but he's also receiving workman's comp during that time. So it's like, I could scenarios and situations like that. I could call her before I ever pre-approve the borrower and say, hey, here's what happened. Here's what it looks like. Send me the pay stub, send me the work, and we have a calculation worksheet. She'll fill it out. She calls Fannie Mae for us. She calls Freddie Mac. She calls FHA. Whatever we need, she is like our partner.
I see.
And it's a totally different experience when you have that. And there are a lot of lenders that have that same thing. We're not the only ones. There's some good lenders in the area that have the same kind of setup and the same kind of situation. And it's just a different experience for their clients and our clients when we can do that. We can make the quick call to the underwriter and get somebody that's, on the phone that's able to tell us exactly what we need to do to make it successful.
Yeah. It's funny because one time we did an FHA in, what was it, 8 days in summer of, was it 20 or 21? I don't remember. It was like July. I remember it was July. And the agent, I think, also owned the house. And it was a big red flag. There's no way you could do it in 8 days. I'm like, dude, call my guy. He will tell you everything. So how do you handle that? Because it's like, it's too good to be true. And I've seen that on my end, just being a realtor. It's like agents will tell you what they want to hear. I just got done. I had to pull a contract. So I was like, hey, listen, we got multiple bids. Oh yeah, we'll give you this. We'll give you that. We're going to, pay the appraised different. It was too good to be true. Agent was great on the phone, told me everything I wanted to hear. Second, we get under contract. Doesn't talk to the attorney of every conversation we had. Didn't talk to the lender. Wasted 2 weeks. Threw it out the window. Seller was pissed. I go, what happened? To the agent. She's like, I don't know. Did you communicate it with the lawyer? No, that's not my job. Like after, there's like that sense of liaisons wasn't there.
Right.
But those are things that I see. But on your end, when it's too good to be true, how do you combat that? Does that make sense? When people are so skeptical, how do you get around that?
Yeah. So, I mean, it is, the one thing we have going is my longevity. I've been doing this 21 years. So there's enough people now that know that we can get that done very quickly. And we work with a lot of top agents, and your word is valuable in situations like that because you're referring me. And, especially if you're working with people know that Elliot Lowe does business. People know that you close business. So if you tell them, hey, my guy says he can get it done. And then I also call, there are some times where people are like, there's no way that's impossible. And give us a shot. Listen, let us try. I promise you, we are going to do our best to make it happen. And most of the time they close 8 days, 10 days, 12 days, 15 days, whatever it is. We've kind of got that reputation now where we can get it done.
I've got deals because your name was on the contract.
I appreciate it, and that's part of doing a good job and being thorough, caring. I lose sleep if something's not right. If I have a client that's not happy for one reason or another, that hurts. Like I'm a weirdo like that, where it's like I will literally stay up at night and like lose sleep because whatever client's not happy, and I will always try to do whatever it takes to get them to that point. And it's gotten, I've literally given up commissions before.
Yeah.
Where, it's
I was
like,
say that, but I didn't know if you wanted to share that.
It is what it is, man. I just, to last in any kind of customer service world, whether it's real estate, mortgages, whatever it is, you have to go the extra mile.
You gotta make it right.
You have to make it right. If there's something wrong, and I've had it before where I know I didn't do anything wrong. In fact, I remember one particular story where we always give our clients the choice. They get to pick their interest rate. I don't tell you what rate you're getting. Here are the options. Here's with 0 points. Here's if you want to do a buy down. Here's if you want to get a credit. We give them options. And some lenders don't do that. Some lenders just, give them the lower rate, but then they charge them all these extra fees to do that. And you can imagine it leaves a bad taste in the client's mouth later on when they find out, well, I was charged to get this rate. So we don't do that. So I always give the clients options. And I remember one time in particular that always kind of stands out. I had an elderly lady that, she told me what she wanted to do. I did it. She wanted the lower rate. I did it. I locked it in. We get to the closing, and I get a call from her attorney at the closing saying that I'm overcharging this lady. Sir, I'm not. That's not what we do. Here's what she wanted. Here's the rate she wanted. And we had proof, but in her mind, I was wrong. And
the attorney or the client?
The client. In her mind, I was ripping her off because she was elderly.
I hate that.
And it wasn't. That wasn't the case at all. But she felt that way, and she was upset. So I literally wrote a check. I put it in the mail. I sent her a note saying, hey, here's what happened. I didn't take advantage of you. You wanted the lower rate. That's why you were charged the extra. But just to show a sign of good faith that that's not the type of person, I will forego my commission. And I sent her a check.
Wow.
Never heard from her until about 3 years later when her son was buying a house. And would you imagine who she referred? She referred me to her son.
Wow.
And since that time, she's referred me to other people because even though I know I didn't do anything wrong. You don't last in this business or any business if you're taking advantage of people. People know that. They're not stupid.
Right.
I know when someone's trying to sell me something, you feel it. And so, that was just one of the times where I that hurt. I had to write a pretty big check and I'm like, I did nothing wrong and here I am. But guess what? It came back tenfold, because she realized that I was a good dude and I didn't screw her over and she probably made a mistake. And it was funny too, because I had driven to her house in Chicago because no email, no nothing. I'd driven to her house 3 or 4 times to get paperwork. And
first class mail?
Yeah, well, it was a quick closing too. It was one of those where it's like, it's got to be done in 15 days. And it's all right, well, I'm driving to Chicago. So, but it was, like I said, it came back multiple times because I did the right thing, even though I didn't have to. I could have slept that night with that, knowing I didn't rip her off. She got a better deal. She wanted that. That was our conversation. But I made it right.
That's cool.
And it ended up coming back. So
then her son did the same thing to you. And
no, nothing like that. No, after that it was smooth sailing, and over the years she has referred other family members, and it all works out. If you do right and you do good and you take care of people, good things happen. And that's, I believe that in any line of work, but especially in ours, because we do, for a long time, mortgage loan officers were worse than used car salesmen, reputation wise. After the crash in 08, in 09, 10, 11, 12, when we were still kind of reeling from that, I remember just like this sense of it was the loan officers that did all this. They caused the crash. And it wasn't. It was Wall Street.
You guys were treated like mechanics.
Pretty much. So we had a very bad connotation. But then also there was a lot of unscrupulous lenders out there. Back then you didn't have to have a license or anything. So that all changed. Now we have to have licenses. We have to do training, to get a mortgage license. You have to do annual training to maintain your mortgage license. Our company also provides all kinds of training tools that we have to, hours and hours of, different laws and regulations and changes. And so it's a little bit different. It was like the wild, wild west before the 08 crash where anybody could do it. And there was a lot of shady people.
Do you think there needs to be more regulation or more training for this? Because you said there's no license, right? From a realtor perspective, they could probably hear me next door, but I'm transparent enough. 9 out of 10 realtors fail, whether they're realtors or just real estate agents or whatever the case may be. Some just don't care. Yeah. Those are the idiots. Then you get other people that just like, oh, cool, let me get my license. They're taught the laws and not how to get sued, but most of them don't know the basic foundations of like business 101.
Right.
Or practices, chair side manner, basic accounting principles. Like you need all those little aspects to run your business. And then I know realtors that whether they do it part-time or they've never bought a house before, they're out helping people buy the most expensive houses out there. The common sense tells me that's just dumb. Yeah. Right. It just doesn't make sense from like a transparent standpoint. So from the lending side, and also I think there could be a thing where continued education's online. In Wisconsin, I never did this flat out, but it's all online. I can literally pay someone if I wanted to. Yeah. Hey, here's $100. Just pass the test for me, right?
Right.
Does there need to be more regulation in the lending field? Is it the same concept where people come and go because they don't know what they're doing? Like, what does that look like? Because I've worked with some lenders and I'm thinking, maybe you set the bar this high and they're just here, but there's some sort of disparity, and maybe you're just that good. I don't know what it is, but it throws me off, and I get pissed when someone's like, oh, use my guy from Rocket Mortgage, and I'm thinking, great, he's not going to even be on the phone 3 days from now. It's going to be somebody else,
right, or
this bank or that bank. It's you know what I mean? Like,
I do.
What is that? What does it look like, and what needs to happen?
Yeah. So, you do have to, unless you work at a bank. If you work at a bank, you technically don't need a license because you fall under a federal bank charter.
Oh.
So, but if you work at a company like Cross Country Mortgage, that's just a mortgage company, we have to have and maintain our NMLS number. So, we do have to do upfront coursework. We have to go in person and take the test. But then every year after that, it's basically 8 hours that's required. And so you have to do continuing education. Some states have a test, some don't. But then we also have corporate training too, where they're constantly, these online modules that we have to go in every month pretty much and watch an hour video about whatever changes or,
sometimes they're a joke, but
yeah, it was like we have like sexual harassment. We have, sensitivity training. We have, all kinds of different modules that we have to take throughout the year to maintain corporates. But there are some companies that, that don't have a lot of that. Some of the smaller lenders may not have the same sort of, kind of like Keller Williams. Keller Williams is pretty good at training. They take new agents and they offer them all of these tools. They're a big company. But if you're working for a mom and pop brokerage in your world, they may not have that. But that's not to say that, you really got to be motivated to learn as the individual. So when a new loan officer comes into the business, if they're hungry and they want to learn, they'll figure it out. And
so it's the same realm almost.
Pretty much. And especially if you have like a mentor. Like I'm really big, like Beth was my mentor and she still is. I could call her anytime. She's one of the top loan officers in the country. And, I could call her and get her opinion. And in fact, I do, because we're counterparts now. We're both managers of teams. And so, I regularly ask her, hey, how would you handle this? Hey, how would you handle that? So the mentorship part of it, I feel like is huge. Mm-hmm. And it is kind of lacking in our world. There aren't a lot of mentorship programs. It's a big investment to get licensed and to get your foot in the door. And if you think that's just getting licensed is gonna help your business take off, that's not like what you said. It's just enough to keep you out of jail, but it doesn't teach you how to talk to people. It doesn't teach you the bedside manner. It doesn't teach you, the ins and outs of it and all the different nuances and how we talk to realtors and what we're legally allowed to share with attorneys and, all this other stuff that goes into it. I really feel like the best way is to have a mentor, have a senior person, whether it's a realtor that, a young person wants to partner up with and kind of learn the ropes from, in my world as well. I feel like that's the best path to success. Companies like Rocket, I don't think they have that. I think they just kind of throw you into the lion's den.
9 to 5 salary, here's a bonus if you get it.
Yep, hope for the best, and it's like they don't really teach you all of the, and we don't want to pick on just Rocket, but there's a lot of lenders out there that really don't have a good grasp on what it takes to get from point A to point B.
I think it's any company though. It's so funny because one of the reasons why I'm doing this, little background, I just had my buddy Gordon who's into fitness. He's his own sole proprietorship business, and I plan on having other people. I mean, you're up here compared to most people I know, but it's like, we have a salon, super successful, and you're very similar to Paige. Yeah. Obviously, there's an age gap, like not in a mean way, but you know what I mean? Like, she's younger, and what I've noticed between the salon, your business, my business, other realms, it's all the same. You got to have like your mentorships or whatever, and it's just funny because, I don't know, little epiphany here. It's like I heard you say that, I heard Gordon say that, I heard a bunch of other people say that. Paige works for a whole national company called Summit to Teach. It's all full circle, man. So I think something that I'm learning, not that you asked, but it's I think it's good to learn other aspects from each business.
Sure.
To kind of keep the business going, if that makes any sense.
Yeah, we're all in the service field. At the end of the day, whether you're cutting hair, whether you're helping people buy houses, providing mortgages, providing fitness training, it's service. And, it always goes back, and I teach my people this, that it's funny. I just heard Logan the other day say this, and I'm like, I wonder where he heard that from. But it's like, I'm not here to sell you anything. I'm here to help you. And it's a whole different aspect. Like, you've gone to places and you feel like you're getting pitched, and you feel like there's, when maybe you don't even want to be. And it's like, dude, just relax. I just want to learn. I just want to learn about this camera. I just want to learn about, and that's kind of like how I approach it, as I'm here to help you. You want to buy a house? Great, go buy it. But if you can't pay for it in full without needing to borrow money, then let's work together. I'm here. I will give you all of your options. I will explain everything to you as thoroughly as possible. And some people want that. They want the thoroughly as possible. And there's other people that are just like, tell me where to sign.
That's what I'm, that's me. I'm like, dude, I don't want to.
Right. Yeah. And I am too, to a certain degree. I mean, I just yesterday I had some elderly folks come in, and they were applying for a VA loan, and they wanted to really learn, and no problem. It took us about 2 hours to get through the paperwork, and they were tickled to death. And I was, they're laughing and saying, oh man, we took up all your time. And I'm like, nope. Not at all, because, it reminded me of, earlier in my career, I did a loan for an attorney that read every line. 4 hours we sat there, and I was like, but hey, it is what it is. Different strokes for different folks. If that's what makes you happy, and I totally understand it. I'm not one that I will if I trust the person and I know the person, and especially if it's something I've done before. But, like when you buy a car, like, I'm not going to read show me what the payment is, show me what the interest rate is, show me what the price of the car is. That's all. I don't need the fine details, but some people do, and we're totally fine with that. So that's part of the service, right? Where it's like, when someone comes into Page, they just take an inch off the bottom. That's a different than someone that comes in and wants this and wants that, and I do this and do that. And it's like, how we react to all those different scenarios, that's what's going to make the customer happy, and that's what's going to keep them coming back. And at the end of the day, they're going to refer their friends and their family if they have that good experience. So we almost have to, take every single deal, every single client, and treat them how we would want to be treated, and give them that level of service. And if they want more, we give more. If they want less, no problem.
Makes sense.
In any line of work.
Yeah.
So, again, I stress, that I'm not here to sell you anything. I'm here to help you.
Yeah.
And I will give you all of your options. And at the end of the day, you get to choose what works best for you. And that approach is, I really feel like, what most people want, whether they're buying from a house from you, or getting a loan from me, or getting a haircut from Page. Yep. Same idea.
So we had a client back in 2021 that really cautious. They bought a house from a military family, so there was zero taxes on the property. And so their mortgage was like $1,000, because you get the idea. They have to like fast forward. Yeah. So, I told them, hey, listen, don't move money. Actually, I'll be honest. What I tell people is like, hey, if you have any financial questions, don't ask me, ask Sly. I pawn it off to you. And the reason I do that is because I'm like, hey, listen, if you're getting a loan from somebody, hear it from them directly. I don't want to be the person, right? So I think, I don't know, maybe every single time they had a question, they asked you, hey, should we buy furniture? Should we do this? Should we do that? Whatever that looks like. What I didn't factor in was he had a 3-year lease on a car that expired a week before we closed. And then that almost stopped them with their debt to income ratio because they had to buy out the car. Do you have a checklist of things that they should do or should not do? Do you send them an email? Like, what does that look like? Something I'm trying to do with my business is, my thing is time, right? You meet with everyone. That's great. I have to help with the salon. I got the photography business. I got this. And I just like to save time personally, right? Absolutely. So I try to automate everything. Do you have a checklist or something that's like, hey, refer back to this if you ever decide to make an impulse decision from today to the day you close, or do you just have a conversation? And what are those items?
Yeah, no problem. Yeah, so we do have a do's and don'ts flyer, and we also have it in an email format that goes out. And it's pretty cut and dry. Like, I tell people from the very, very, very beginning that we want to keep everything as close to what it was the day you applied between now and closing, meaning stay on your job. Now, if you have the opportunity of a lifetime and it's in the same line of work, and we could get a letter from that employer and you're getting a huge raise, we've worked with people where they've changed jobs a week before the closing and have been able to still close.
As long as they tell you.
As long as they tell us. Okay. Correct. Because we did have it before where we go to verbally verify. So we have to verbally verify employment one more time right before the closing. And our processor called and they said, oh, he no longer works here. He quit last week. And it's like at that point, then it becomes like, okay, what the heck happened? And even that one, though, we were able to switch it around and he was able to get a co-signer and he didn't have another job lined up. He just got mad at his boss and quit. So we do tell people up front, don't go out and apply for any new credit. If you do, we're going to get a notification and we're going to have to ask, what is that? If you increase the balances on your credit cards, we're going to get an undisclosed debt notification.
Oh, really?
Oh, yeah.
Oh, I didn't know
they
that.
monitor the credit until right before the closing. And
even if we pay the card off month after month, it's just the line. Like if you have a credit card that's like a 10 grand limit, for example, and you push it to 20,
we will get a notification.
Cards do that automatically.
Right. Yeah. We get an undisclosed debt notification if things change on the credit, if balances increase on credit cards. I mean, there's a tolerance, and I want to say it's 10%, maybe 15%.
Okay.
So if your normal balance is $1,000 on your credit card, it would have to go up by $150 or $100.
Oh, the balance, not the credit limit.
Correct. Well, the credit
okay.
limit too. The credit limit, like these undisclosed debt notifications, they monitor the entire credit report, and usually it's pretty easy. It doesn't matter if the balance, the max increases, the credit line increases. We only care about what you have on as an outstanding balance because that's what the payment's based off of.
Gotcha.
So you could have a $100,000 credit line with a zero balance. We're hitting you for zero because there's not a payment due. But the point is, if somebody goes from a $5,000 credit card balance to a $10,000 credit card balance, now we have to factor in that higher payment, based on the new balance.
Gotcha.
So we get reports for that. So I tell people, don't do anything. Don't buy a car. And people call all the time and, oh man, the furniture store is doing a Labor Day sale and they're giving 0%. And it's like, please just wait. Like, we got another week to close. After the closing, no one's going to check again.
Right.
And one of my best clients, like this guy is done so many deals with me because he's a big investor. The last deal we had to delay his closing. And he got all hot and bothered to buy it. And he had gone to Lowe's to buy something. And they offered him a $50 Lowe's gift card to open a new account like 3 days before his closing. And he did it. And I'm like, dude, I would have written you a $50 check. Like, right. What on earth? And he's like, oh my gosh, I feel so bad. I'm so sorry. It'll never happen again. It is what it is.
At least he was calm about it.
Yeah. But at first he wasn't. He's like, why are we delaying? What's this delay? And then,
once he realized it was his fault.
Once it was like,
that's funny. I mean, it's not funny. But.
Yeah, now we got to add this $300 balance on this Lowe's credit card, and we got to get a letter from them saying what the payment is. We have to send that to the credit bureau, add it to your credit report, then we can close. So in any case, I am very, very thorough upfront, again, with, explaining people what they should do, what they shouldn't do. And it's really just keeping things, as close to, like the day I pre-approve you, let's keep everything like that. One of the biggest things is people depositing cash.
I was just about to ask that question.
Huge problem. I mean, in real life, cash is king. Like, I'm not stupid. Like, right. I prefer cash. I prefer to use cash. Well, not to use it all the time because you don't get the benefits and the points for it. Yeah. But if I'm, selling somebody something or if, whatever, cash is king in the real world. But in our world, if we can't source it and we don't know where it came from, we can't use it.
What's that limit?
They're really, there's really not a limit per se. And the reason for that is because, so like when we look at bank statements, we look at the deposits, and technically anything that's non-payroll, we have to source. So most underwriters, if it's an $80 Venmo or a $200 Zelle or whatever, they're not going to question it. But if they see deposits coming in cash and, let's say it's a $500 deposit that was cash, they're going to ask where that came from. You can't prove it. You could tell me, oh, well, that was my grandma gave me birthday money, but how can we prove that? So
don't you have to go back and get their statements?
Well, yeah, but what if she had the money in her mattress and she gave it to you and they can't prove it?
So what does that do? You just can't close altogether?
Well, then we have to back out that cash, and they have to qualify as if they don't have that. Or there are cases where you got to give it back and, have her write you a check out of her account. So, I mean, it's kind of a gray area. But, the point is we as lenders have to look at the whole bank statement, every page. And if we see non-payroll deposits, we have to source them. We have to dig deep and find out where they came from. And if there's an explanation and we could show that, it was a check received for, I sold my baseball card collection, or I have a guy right now that's selling livestock to come up with money for a down payment.
Are you serious?
Totally fine.
Wow.
You can do that because you're getting a check. We could show that, there's a bill of sale for,
That
and
makes sense.
we could prove where it came from.
Yeah.
The problem is when, people deposit cash, they have, sitting and, they go to the bank and they withdraw $10,000 and they sit on it for 2 years. And then, it's time to buy a house. Oh, let me go redeposit that money. We can't prove where it came from.
Yeah.
And so it makes it very, very difficult. And so now we have to figure out basically a way around it. And that's part of my job, is being like a, how do we get around some of this stuff because people do crazy stuff with their money and with their finances.
Yeah.
And I mean, I've been on the other side of that, where it's like, if you don't know, like, well, that's just what I thought, I should do. And so, we're very careful to have those conversations ahead of time and try to avoid and alleviate some of these issues that can come up.
Because before we bought our first townhome in 2015 or 16.
Yep.
I was still working in the cell phone industry. We got married and bought a house the same year. My grandmother cashed a Japanese bond.
Yep.
Which once you cash it, I don't know how it works, but it's weird. It's like, oh, here's an old school paper that they got in the 50s.
Right.
Cashed it. It was like a World War II post thing that's been in the family. I don't even understand it. Wire transfers me money. I didn't know. I was like, oh, sweet, awesome. And then loan officer goes, hey, where'd that money come from? I'm like, I didn't know. We had to ask for this piece of paper, mailed it, gave it to them. They're like, we can't read this, so I had to find a translator.
Yes,
I'm like, you're a translator. It's like, well, are they accredited? I'm like, well, what the fuck's accredited? I don't know what that means. And then they're like, oh, now you need to get it notarized. I'm like, oh my goodness, man. It cost us like $800 just to use that money, which I didn't know.
Right.
And then what about like earnest money? Can people pay that on someone else's behalf or no?
As long as the person signs a gift letter and they give it to them as a gift, we've certainly helped that out, before. I mean, we work with buyers all the time that mom and dad want to help out, and that's fine.
Okay.
As long as we know, and as long as you tell us, hey, I don't want to get 3 weeks into the process and then have to get a bank statement from mom and dad and get a gift letter signed. And, I'd rather do it up front. So that's totally fine. But just, again, it's the depth of the conversation that we're having with the buyers up front. I dig for these. I ask these kind of questions on purpose because I know it's going to be a pain in the butt later.
Yeah.
So let's do it up front. Let's try to get as much information, too much information. I mean, I'm one of these that I would rather over document and because it's easy if you ask for it up front. What clients don't like is when you have to come back 2, 3, 4, 5 times and ask for paperwork.
Is anybody ever like hesitant? They're like, hey, I just made a phone call 5 minutes ago because Elliot said call you, and then you're asking the most personal questions, or?
Yeah, I mean, I always tell people from the very beginning, I'm going to be more thorough because it's going to only help you. I'm doing it for your benefit. And when I say it that way, people understand. Nobody wants a surprise.
Right.
When you're buying a house, you want to know what to expect. Back in the day, before some of these laws and TRID and all these, regulations, lenders could surprise people. And obviously you're not going to last in the business if you do that. But I know of horror stories. You've heard the horror stories where, they expect they only need 10 grand at closing and they get to closing and they need 30.
Yeah.
And by that time it's too late for them to back out of the deal and they've already sold their house or they've already given their notice to their landlord. Those are the types of surprises that used to happen regularly in our industry that also contributed to loan officers having kind of a black eye and being the used car salesman, vibe. So, you can't do that anymore. But nevertheless, when I tell a client I'm going to be thorough, but it's for your benefit, the guards down.
So what about credit?
Yeah.
Because I always see people saying, well, I don't want to run my credit because it's going to give a ding. We touched base on this the other day, but it's Let's throw it out there. What does that look like for
So-
credit? People are so afraid to run it.
They are.
Give us the lowdown on that.
Yeah, so inquiries on a credit report. An inquiry is when someone pulls your credit for whether it's for, a revolving trade line, whether it's for an installment loan like a car loan, whether it's for a mortgage, whether it's whatever it is. There's soft inquiries and hard inquiries. Soft inquiries are basically not a full credit report. It's just kind of basic information. I don't issue pre-approvals on a soft inquiry. I know some lenders will, but in my experience, I want to have, again, if I'm putting my name on it, I want to make sure. So in a soft inquiry does not impact your credit. It's not like a real credit check. It's just kind of basic information. A hard inquiry is when we pull a real credit report, a tri-merge, FICO, full TransUnion, Equifax, and Experian credit report, and that can impact your credit. But the impact is minimal. Very rare is it. The maximum it could be is 10% of the total points. I've never seen it anywhere near that. Running your credit one time, if you haven't ran it within the last 120 days, because that's all the inquiries go back to, is not going to hurt your credit. I check my credit several times a year. I don't trust Credit Karma. I don't trust the Capital One app. For me, it's like I'd rather just make sure there's nothing weird on there, make sure, all my accounts are accurate, because 70% of credit reports have errors on them. And my dad and I shared the same name. So in the past, I have had some of his stuff on my credit. Not that it was ever a big deal because he paid it, but nevertheless, it looked like I had more debt than I really had.
Well, there could be a Joe Johnson way over here and a Joe Johnson way over there. Oh, I see. Okay.
Correct. So it's one of those things that, yes, inquiries very, very minimally impact credit. But if you have credit issues and you have credit issues, to me, it's more important to know what those are and to start addressing those than it is to worry about, oh man, I don't want my credit ran. The sooner we run a credit report, the sooner you could start working on it. So I have people all the time that, hey, we're getting married next June. We want to buy a house in, May or whatever. When should we start? Now.
No. Yeah, people don't take that approach, and it bothers the living hell out of me.
It's like, why wait until, especially if you have something that could come up. And most people, not most, but a lot of people do have stuff that can be resolved or can be, for instance, when I pull someone's credit, let's say you have a credit card that has a $2,000 max, and the month before you booked a trip to go to, Mexico for a week, and you put $1,800 on it. When I pull the credit, it looks like that account is maxed out. So your score is going to be impacted by that utilization of revolving credit. You're going to have a lower credit score because it looks like your account is maxed out. Well, we could always, hey, here's what it is. We provide a report that says this is how you can improve your credit after we run it. If you pay down the principal balance on that account by $1,200, your score is going to shoot up 39 points. I could tell you how to do that. I could walk you through that, and then you get a better interest rate because your credit scores went up. So that's why we always really, really strive to get people in early, especially if your lease is expiring in January. Why would you wait till December to try to figure this all out? Get in now. Let's take a look at everything. We'll give you a game plan if there's anything you need to do to resolve. I would rather know early than wait till the last minute and not have my credit checked and possibly have issues that may make it worse for me.
And that's the most underutilized mindset that people don't have. It's the most
Totally.
underutilized thing of all time.
People think that, if you pull my credit, it's going to ruin. That's not the case. It's very minimal impact. The max is 10%. And in order for you to get anywhere near that, you would be having to have multiple inquiries going at the same time, meaning you're applying with me for a loan. You're also trying to buy a car, so you're having your credit ran over here. You also just decided you wanted a new Disney credit card, so you got that. You're also at Target, and they're giving you $50 in Target cash. If you're doing all of that at one time, your score is probably, let's face it, the credit bureaus, they're looking for that. Mm-hmm. If you're applying for all this new credit and you don't have an established payment history on all these accounts, of course that's going to drag you down. But the other thing to say about that, though, is when it comes to like shopping for a car or shopping for a mortgage, the credit bureaus do give you a grace period where there's typically 30 days of, let's say I run your credit and it's a mortgage inquiry, and then you decide you want a second opinion or you want to go by your bank or you want to, within that stretch, it's technically only treated as one inquiry, no matter how many mortgage companies pull your credit.
Oh.
So same with cars. When you're shopping for a car, now I have seen it before where car dealerships go crazy and they're trying to get your payment where they want it, where you want it to be, and they'll run your credit 90 times in a weekend, and that's a lot, but technically same thing. You have a 30-day window where multiple dealers or multiple car, loan companies or banks or whatever can pull your credit, and it's technically still treated as one inquiry.
Gotcha.
So they do give a grace period for that, but like I said, I mean, the point is get in early. Like, let's find out, let's take a look at it and see. And even if you think your credit's perfect, I have seen some of the craziest things on credit reports where it's like, well, I didn't know about that. Like, a $15 collection, that could drop your scores. And if it's something that like we can guide you through and say, hey, why don't we talk to these people and see if they're willing to remove this if you pay it off, not just remove it in the sense of they're showing it as a zero balance, but permanently delete it as if it was never there. Or we recently had this is a good reason why this is important. We had a gentleman apply for a loan, and he currently has a mortgage, and on his mortgage they had him marked late 12 times in the last 2 years on his mortgage payment. You could only have one 30-day late in the last 12 months or two in the last 24 for most programs. This guy said, absolutely not. This is insane. He's like, I've never been late on my mortgage. What are you talking about? He doesn't monitor his credit, so he had no idea. And we were able to send him a copy of it to show him. He instantly called his lender and said, what the heck is going on? Mistake on our part, will reverse all of it.
Like you said, there's errors on credit
Just
reports all the time.
And this dude had no idea. Had he gone to go buy a car, he would have gotten a really high interest rate. Yeah. And at first we weren't even able to help him but he went back to the lender. They reversed it. It had to do something with, I don't remember if it was during COVID, or it had to do something with his auto pay, and they switched something, and he'd always made his mortgage payment, but it might have gotten missed. Something got missed, and that one little blip created a rolling 30-day late where it was being marked late every month until he discovered that.
That's rough.
So again,
it's not a bad thing to check it at the end of the day.
Right. Absolutely. And I know people love to, monitor it themselves, which is totally fine, totally good. Use Credit Karma. I don't like them because they're not thorough. Mm-hmm. I can't tell you how many times someone said, oh, Credit Karma says I'm at a 780.
Those are soft, you said, right?
Well, those aren't even soft. Those are just credit monitoring. It's just an estimate. That's not even a soft
So if people look at that every day, it doesn't have a negative effect?
No.
Oh, okay.
No. So Credit Karma, you could pay to get a real credit report, just like you could go to freeannualreport.com or freeannualcreditreport.com and get a copy automatically from the credit bureaus. Credit Karma is just monitoring, and it uses very basic information. At least the free version. You could pay for the upgraded version, which will give you more of a real credit score and a real credit report. But, Credit Karma is very inaccurate. And they don't take everything into account. They just take the little blips of information and assume that everything else is the same. So, monitor it, keep an eye on it, but you can't use that as, people all the time say, oh, well, Credit Karma says, I have a 780, I'm buying a house. Let's pull a real credit report and then make that determination. Don't trust Credit Karma, especially if you're making a big move like buying a house or buying a car, or you're better off, getting concrete, real information that you could base your numbers off of than just relying on consumer information.
I always tell people, if you're giving them the loan, ask you.
Yeah.
Makes sense.
Yeah, no, that's what we're here for. That's what I'm all about, is providing, that level of service and get in early. That's the key is, don't wait until a month before you got to be out of your apartment to start figuring this out. Let's get an appointment, or, give me a call, you could fill out an application online, whatever it is, and start gathering information before it's time
Early.
to before
Right.
it's time to move.
Yeah.
So that's kind of the key there. And then so inquiries can minimally impact your credit. The biggest thing. So we do those rescores I was talking about. We do them pretty regularly because, again, the higher the credit score, the better interest rate we can offer you. It's all tiers. So people with good credit get this interest rate. People with mediocre credit are down here. People with poor credit are down here. So we want to try to get you up as high as possible on those tiers. And our credit reports, like I said, when we run a credit report, if there's room for improvement, it'll be in parentheses right next to the score, and it'll say we could get this score from a 692 to a 713.
Oh.
I click on that 713 and I say, how do we do that? And it spits out another report that will say if they pay their Chase credit card from a $700 balance to $522, if they pay their Citi card from $1,000 to $800, it'll give me exactly what the person has to do a rapid rescore.
Oh.
So I regularly, and some companies won't allow you to do that. Like I remember, it was a long time ago, but there was a company I worked for that whatever the credit score we pulled, that was it. They didn't give you any ability to improve your situation.
Well, they don't come from a consultative approach like you do. It's just like,
right.
What am I doing? Oh, this is what it says.
Yep. So here, and we have really helped some people because, sometimes the stupidest little thing will knock your, like I said, you book that trip to Mexico, you put $1,800 on your credit card and your score drops 40 points because it looks like you're maxed out. Well, how easy is it for me to just tell you, hey, let's pay this thing down. The system will tell us the exact penny they want it to see. It knows the algorithms for the credit bureaus to get that credit score back up. We do that all the time. And it's a free service. We don't charge anything for it, so we could really kind of help people get the best possible, especially right now with rates where they are. Every penny matters all the time, but it's especially magnified now where, I don't want to pay 7.5% interest if I could pay 7.25%.
Yeah.
7.25% still sucks. Don't get me wrong.
Yeah.
But I would rather try to get the best possible deal, available. And that's one of the ways that we could kind of help people, realize that, hey, let's take a look at it and let's see if there's anything you could do, to improve your situation. Why wouldn't you want that?
Credit, people are so tight up that. You said that was only like 10% of the inquiry?
Maximum 10% of the score. Yep.
So it also goes down more. What's the debt to income percentage, if you will? Not the percentage, but out of, like, if you had a pie chart, credit's 10%. Debt to income, what is that? Because I think that's the biggest factor, isn't it?
Well, so the utilization of revolving credit and payment history are the two biggest.
Okay.
So payment history, you can't be missing your payments. I can't tell you how many people have come across my desk that they have the money, they just sloppy.
So what happens if, like, because I'm leading up to this one question. I really want your take on it, right? And I know I'm kind of hyping it up, but it's because you've got kids. They're like 10, roughly?
10, and 8.
Yeah,
so 11 coming up in 8. Yep.
Perfect time. So you always see, like, a bunch of kids. They just turn 18, right? I saw this as a kid growing up. Girls are like, oh, I want that good smelling perfume at Victoria's Secret. We'll give you 15% off if you open up this credit card. Boys, oh, yeah, then brand new Xbox is coming out. Best Buy, 18 months financing,
my first credit card, yep.
My wife, she student loans, right, for hair school. And they said, oh, once you do it, fast forward a year, oh, you don't make your first payments for 3 months or 6 months. Yep. Forgot about it, and that impacted her credit first. So fast forward, she's 29 now. Kids doing that at 18. I'm 33 now. You get the idea. Does that still impact your credit if you forget? Like, that's your only credit history for the first year, is that Victoria's Secret card or your Best Buy card? What does that look like if you're trying to buy it today at the age of 30, or is that not a thing? What does that look like?
Yeah, after 7 years, it's not going to be on your credit anymore.
Oh, okay, that's how that works.
So I'll tell you my experience.
Yeah.
And I knew better.
I didn't.
Mine is worse, though, because mine was when I first started working as a loan officer. I had a car payment at the time, and for some reason I didn't set it up on automatic payment. I just would pay it every month, whenever I felt like it. I would call it in, and it was a Baxter Credit Union, which is an awesome place to get car loans. And I would call my payment in, and I remember it was Memorial Day weekend, and it's like the May 31st or whatever, and I'm like, crap, did I make my car payment this month? And I couldn't remember or not. So I'm on the golf course, and I knew like the next day was June 1st, and I would be 30 days late because my car payment was due on the 1st. And so I'm like freaking out. I'm like, oh crap, I don't know if I made this payment or not. Like, let me call. They're closed.
Oh, no.
And so I'm like leaving messages, like I'm calling like the emergency fraud line. And I'm like, oh my God, I forgot to make my car payment. Can you take my payment over the phone? And needless to say, they took the payment, and I'm thinking, all right, I'm good to go, until like 2 years later when we go to buy a house, and my wife's credit score was 800 and mine was like 680.
You're like, what the heck's going on?
And I'm like, what? Like, I don't have any debt. Like, what's going on? Sure enough, they dinged me because the payment didn't go through until after the holiday.
That's rough.
And it was June now. So the biggest impact is the payment history and the utilization of your revolving credit. So credit cards, don't max them out. That's bad. That looks bad. Keep the balances to below 50%. The lower the better, but 50%. So if you have a $2,000, max on your, Capital One credit card, don't go above $1,000. Keep the balance below that, so that whatever day that's reported to the credit bureaus, it doesn't look like you're maxed out.
So we use one credit card for everything because it's the best
Points.
point system
Absolutely.
that we have.
Yep.
Would you say from a safe perspective, just have 5 cards and allot them equally? Because
so here's the thing. The more cards you have, obviously, the more risk that someone can get one of those numbers or whatever. But you want to have more than, like, if that's the only thing you have, having only one thing open, I don't advise. In fact, just this week, I talked to a lady who one thing on her credit, and that was her credit card. So there's not a lot to go off of. Now, in her case, she was expecting her credit to be way up here, and it was good, but it wasn't as good because exactly what I'm talking about. Last month, she put a couple trips on her credit card, and that's the only account she has open. So because that balance went up, her credit score dropped a little bit. Her previous mortgage was paid off. Her car was paid off. So that was the only trade line she had open. We don't want that. You want to have at least a couple of trade lines, but in your case, you have a mortgage. I don't know if you have any car payments or not. You have a couple things that's going. But if you only have the one credit card and it's a $5,000 max on it, and you're putting $4,900 on it every month and then paying it off, that could be bad. You could have a lower credit score depending on the reporting and whatever the balance was at the time that your credit card company reported it to the bureaus.
So let's say I just change all this.
Yep.
For example, tomorrow, and then we run credit a month from now. It just shoots up automatically, or is it because we've been doing this for so many years?
Well, so your payment history is going to be taken into account, right? So like you have a good payment history.
Right.
And in your case, so like the more accounts you have that are in good standing, the better your credit's going to be, and the less one account is going to impact it.
I see.
So if you have 5 good trade lines that you've been, car payment or credit card or whatever that you've been making payments on for a long time, and only one of those accounts is maxed out a little bit, your score may drop a little bit.
It's like a mutual fund.
But if that's all you have, if you only have the one credit card and you max that sucker out, your score is going to drop a lot.
Like one stock.
Yeah, there's not a lot. Correct. There's not a lot to go off of.
That makes sense.
So, with credit, really the payment history and the utilization are the most important things. The length of time the accounts are open is important too. So if you buy a new car and you start a new car loan, the first couple months, your credit score is usually going to dip a little bit until you establish that payment history and show that you're making that payment. But also on the other side of that is, let's say all you have is a car payment. No credit cards open, nothing else. If you pay that car off, which people think, oh, it's a good thing to pay my car off. It is in real life, but from a credit standpoint, as soon as that installment loan is closed, you no longer get credit for it because you're not making payments on it. So I have had people that have seen their credit scores drop significantly because they paid off their car early, or they paid off their boat or their motorcycle or whatever other installment loans.
I see.
So, another lady, you can't win. The funny thing is I have another lady that I was talking to yesterday that she's got 3 months left on her car.
Yeah.
And she doesn't have a lot of other credit. And I'm like, you better buy a house before you pay that car off, because it's going to take a while for, if she goes and gets a new credit card now, it's going to take a while for that to kick in.
Gotcha.
But in 3 months, she loses her best trade line. She's been making payment on this thing for almost 5 years, never missed a payment. I'm like, you're going to lose that credit.
So with the debt to income ratio, it's like you can afford more house, but then the credit, if it drops, then your interest rate goes down.
Correct.
So it's like a tipping scale.
Yep. So the debt to income ratio is what we look at to determine how much they can afford. So we have, depending on the loan program, very specific parameters. And we know that typically, especially if you're a conventional buyer, 50% is the maximum that's approvable on let's say a Fannie Mae conventional loan. So that's where we do this detailed analysis. We look at all of your current debts. We add it all up. We have a whole spreadsheet we do. And then, whatever's left over, that's how much your new house payment can be. So those numbers all work together, because, if you have a bunch of balances on credit cards, we only have to count the minimum payment, but we have to count all those minimum payments to go into the debt to income ratio.
Gotcha.
So, that's another calculation that we do. I mean, the credit score is one thing, then the debt to income ratio analysis is another thing. The income analysis without the debt is another thing. We have to, because again, a lot of times people don't know exactly how much money they make, and they may know how much, but they don't know what we can use, because we have to take averages. If you're hourly, we take an average of the last 2 years.
Well, it's also before tax too, and that's
correct.
Something that people don't look at. They just care what they get after they pay Uncle Sam.
Correct, which is kind of weird if you think about it, because it's like, I don't care what my I care about what my after-tax money is.
Right.
That's what actually goes in my pocket to pay my bills. But in my world, we do look at the gross.
Makes sense.
So, and that's typically, like I said, around 50% is like the max for a conventional loan. Depending on credit and whatnot, we could typically go a little bit higher on an FHA or a VA loan. But yeah, 50% is kind of the rule of thumb we're using. It used to be 43%. But now most places are 50.
This is controversial, right? So You do well. I do well, right? Well, Paige does well, and I'm just lucky that I married
No. You do well too, my friend. We all do well.
So something that I have a conversation with all the time with people that are, salaried, they're like, oh my God, inflation this or inflation that. It impacts your job. It impacts my job. Cost of stuff. Like one of my good friends just had a kid, and he's got another kid on the way. Baby formula. I don't have a kid. I don't know how much it costs. You're not buying baby formula today, but it impacts everything, right?
Yep.
And then people say, they haven't started their lives yet, and they're just, I got to preface this. People are just like, oh, houses are expensive, but they're living the same jobs, trading hours for time and all this other stuff. Then they say they can't afford a house. That one bothers the hell out of me, because I see people with a $1,500 iPhone that they don't need. And for example, iPhone 15 is coming out next month or whatever.
Yep.
And they're like, well, back in my parents' day, houses were $83,000 and my grandparents like $33,000. What's your take on that? It's such a broad question, because something I always tell people is, you've got a $1,500 iPhone. Why do you have that? You just graduated college, and now you're driving like a $60,000 Mercedes because you wanted a brand new car, but you still live with mom and dad. So by the time you pay it off when you bought it when you're 24, now you're 29, you need another new car. And this is why I was asking about your kids earlier. Like, what are you teaching them? As like a father figure, I don't care about your business. And I mean, I do, but you know what I mean? Like, out of all that, like if you could preach that one message, what is it? Because I feel like compared to when, you graduated high school when?
So it would have been 97.
Okay. I graduated in 2008. The iPhone just came out in that year. You were still playing outside. You didn't have iPads. You barely had Nintendo, right? My parents had freaking Atari. They weren't spending money on payments on useless shit compared to what we have today.
Right.
Then once they want to buy that house, they can't do it.
Right.
So if you were to do it all over again, or like, what would you preach to your kids to combat what they really want when they're mid-20s, 25,
Absolutely.
30? What does that look like? What are you preaching to them?
Yeah, so I mean, it's all about priorities. And I see it all the time, exactly what you're talking about, where it's like, I get a younger, person that exactly like you said, they have, fancy purses, they have, $1,500 phone, they have a $900 car payment, and it's like, you're missing the point. Like, those things don't build wealth. Those are depreciating in value. That car that you drive off the lot today that is worth $50,000, brand new, a month later is worth $40,000. And so but it's the media just pushing this, this narrative that you have to have this, and social media especially. And so, a lot of it's like, we just got to get back to like the basics. Do you really need, I get made fun of because I have an iPhone 12. I can afford.
I have an iPhone 13.
Yeah. It's like, I work with these kids, and it's like, sometimes they crack on my phone, and it's like, bro, I don't need to get a new phone every time one comes out.
The app I want for my phone is phone.
Right.
Yeah.
Right. It's really a change in mentality. And like me as a parent, I want to instill that in my daughters to say, hey, that's not what's important. Ultimately, why not invest in something that is over time going to appreciate, right? Real estate over time. Yes, there's valleys and there's mountains and peaks, and but over time, it's going to appreciate in value. You're better off maybe not buying that Mercedes and driving a car that's with, and listen, I'm not preaching, because I went through that. And I remember when, I was young and I got out of college, and, luckily I made really good money from the very beginning. So I was able to afford nice things and whatnot. But looking back on it, I'm like, man, I wish I had some of that money that I spent on this car, or either this trip or that trip. Yeah. So it's really, important, as a parent, or even as like you talking to younger clients to really kind of drive that home and say, what's important to you? Do you really want to live in your parents' basement until you're 30 years old? Probably not,
I know
right?
some people my age that are.
And that's totally fine. That's totally fine. Yeah. But if not everybody's going to want that. And so, my parents sacrificed. Your parents sacrificed. It wasn't always easy for just because the house was 30 grand or 40 grand, they didn't make as much as we do today. Mm-hmm. So there were still sacrifices. And I remember my parents, when they would buy a car, they would try to pay that sucker off as quick as possible to get rid of that payment. Yeah. Nobody wants to pay interest. And that's kind of lost on some of what I'm seeing today is, they don't think that way. They think, oh, the new phone came out, I need to have it. Oh, this came out, I have to have it. I have to have it. And I think we got to get back to a more like the approach of like, hey, let's kind of limit some of this stuff, and let's try to save so that we can have a down payment for when it's time to buy a house. And listen, even if you don't want to buy a house, it's still important to save for your future, and, save for retirement, save for a rainy day. Heavens forbid you lose your job. There's so many people that I see that are one bad thing away from going broke.
Yeah.
And
that's almost everyone.
Yeah. It's scary to think that, so many people live that way. And I used to be like that, but over time, I kind of realized that just because I could afford to go buy a brand new Corvette doesn't mean I need to do that. Yeah. And I guess part of that is growing up too, though. Yeah. Because when I was younger than you, I'd say in my 20s, I did all that. I bought the stupid Corvette. I bought the boat, the speedboat. Yeah, it's like, did I really need that?
Well, you got friends with both. Well, you have
right.
a boat.
Well, now we have a pontoon boat, so it's not the same thing. But we used to, our boat used to drink $500 of gas every weekend, all summer long, $500 every weekend. That's rough. And looking back on that, I'm like, man, were we stupid? I wish I would have had some of that gas money. Yeah. But it is what it is. You live and you learn. But, as I get older, I realize what's important, right? And from a financial standpoint, those things, they're not important. If you look at some of the richest clients I have, you would never, ever realize that they had a dollar. They're not driving fancy cars. They have iPhone 8s, iPhone 10s. I always joke about it. I did a loan for a gentleman who brought his bank statements in, and there was a very, very, very large, it would be 8-figure amount in his bank account.
That's wow.
And I'm like,
nice Walmart t-shirt.
Dude, like this guy, like, I'm like, what do you need a loan for? What? He's like, well, I talked to my financial guy, and the financial guy said that I could, I don't want to pay taxes if I, withdraw out of this account. So I don't want to do this. I don't want to do that. I'm like, if I had that much money, I wouldn't be getting a loan. But hey, and
it's
he was
very
frugal and very down to earth. And, it's like that guy, he probably sleeps pretty good at night, no matter what happens in the economy and what inflation does and what, he's prepared. Yeah. So it's like, we got to get to that mentality of let's focus on what's important, and maybe having all these little extra toys and bells and whistles. And yeah, it's nice, but is that what you want, or do you want something more?
What about things like college. Luckily, I had
Yeah.
tennis scholarship at JCO, junior college.
Yep.
Went to DePaul. Luckily, my parents stashed some money aside, but I never finished my degree.
Yeah.
Because I was like, it doesn't make sense. Like, you take a loan, you pay it back. Common sense. I knew that at 18. Most people knew it, but probably didn't give a shit, in my personal opinion.
Right.
And I know it's a touchy subject, so asking you, when your kids turn 16, are they getting a job at the mall, or are they gonna, like, what little people know, like not a lot of people know this, but I had one of those handicap lockers in high school, and I would ask my mom, hey, can we get like a 24-pack of Mountain Dew? And I would sell it for a can for $1 for back then. What was like a 24-pack for like $4, maybe less. Because when I was at Highland Park High School, we had vending machines that sold soda and everything. And I get to Lakes, they had nothing. They only sold Gatorade in the locker rooms. But so I'm thinking to myself, everyone's like, oh man, I want a soda or something. I was slinging that. I made more money selling at 5 minutes at lunch, the passing period, versus working for like $7 an hour at Banana Republic for 4 hours. That was my first job.
Yeah.
So knowing what you do for the social aspect, would you have your kids work at 16, or maybe you work for you or teach them to make more money than what their friends can make? And then once they turn 18, are they going to college?
Yeah.
Or are they smart enough to get a scholarship? They're too young, I know.
Yeah.
But what does that look like?
Yeah. So, I mean, I started work at 13. The first job I had was pumping gas on boats on the chain, every Saturday. And, we just would work for tips. And then I got a paper route. And then the next summer so the paper route through the school year. And then I started caddying the next summer. And that was really
good money.
Unbelievable.
I wanted to do that as a kid.
I had the nicest bike at age 14 because, you'd make $50-$60 a day cash.
Yeah.
If you worked all week, that was a couple $100 for a 14-year-old. No taxes, it was great. So then I caddied, and then I used to be a big ski bum. Like, I love skiing, and we would go out, to Colorado and all over the country, skiing. Yeah. And so that's how I got that job when I turned 16 at Highland Park at Williams Ski and Patio. So I worked there all through college. I worked there pretty much, during high school, I obviously part-time, but during college, my schedule was like, I went to UIC in the city, and my schedule was pretty lax. So I was able to work almost full time, and I paid most of my way through college. My parents helped me out a little bit, but college was cheap. Back then it was $10,000 a year, maybe, not even. Yeah. And now the cost is just astronomical. So
compared to when I went 10 years ago, and I thought it was high back then.
Oh yeah, now it's crazy. Like, some of these numbers, like I have friends that, their kids are in college and they're, spending $60,000-$70,000 a year. And that's not even for like Harvard. That's for like, good schools. But in any case, so yeah, I definitely like feel like, working young is a good thing because it teaches you responsibility. It teaches you how to talk to people, how to deal with people, whether it's customers or bosses or other employees. So the social aspect is important. And then, it was instilled in us, work hard if you want to get. So we're immigrants. My parents came to this country with nothing, literally nothing, a suitcase. And they worked 2-3 jobs, whenever they could, whatever kind of jobs they could get, and always tried to work and get a better job. And so like it was instilled in my sisters and I that, nothing's free in life. You got to work hard. You got to work for what you want. And I do plan on definitely passing that on to my daughters, just because it's, we don't want to sit around and wait for something to happen. Right. If you want it, you got to go out and get it. You got to go out and make it happen. So, and even for college, I do value education, and I do think that it's important, to get a good education. I don't know that getting a college degree anymore is as
valuable as it once was.
So I guess in my world, you don't have to have a college degree to do real estate or mortgages. I know a lot of very successful people that do what we do that don't have college degrees. Yep. And I'm talking 7-figure earners that don't have a college degree. So I do value it. And if that's the route my daughters would want to go and get that degree, I would 100% support them. But I don't think it's 100% necessary in our world.
Well, unless you're like a doctor succeed. Or like a lawyer, that
right.
makes sense.
Right. If that's what they want to do, by all means, I'll support them and I'll help them. And, but just in general, I guess I'm jaded a little bit now because I did get the college degree, and I know people that don't have college degrees that make way more money than I do.
Yeah, that's why I'm asking you, because you know a lot of people. So
Yeah.
I think from like, it's funny. Some of my best friends I met while at DePaul.
Yeah.
And the relationships that I built, and these are people that came from money, right? My dad enlisted in the military, single home income, blah, blah, blah. And I'm not like, woe is me versus all these other kids.
Sure.
But it's like, I think I valued the friendships more. I'm not going to say it was worth $40,000 for a year's tuition back then. But if I had a kid, I was telling my wife, I'm like, if they don't know what they want to do, send them to junior college, because all the best athletes, right, they go to D1 through 3 schools. I'm over here. I picked up tennis in one summer. I played recreationally, but I got a full scholarship at junior college.
Yeah.
And they paid for that, but I also didn't know what I wanted to do.
Right.
And then I went to DePaul for accounting, so my dad goes, oh, well, get a business degree. Everyone needs a business degree.
Yeah.
But
yeah.
You're going to go to school because it's going to get a good job. And I'm over here thinking, if I continued school, I'd have all this debt. And that's the thing that scares me is I know a lot of friends that have degrees in all these things, and they work for State Farm or they do something completely unrelated. So
right.
I don't know. Just I feel like where you're at with your family and then where I'm at in hopes of having a family one day and then helping, people 5-7 years younger than me and just seeing how it goes. It's just good to get an insight from that. So that's why I ask. Just overall, it's just how do you see this navigating? Because the debt, again, I see a lot of people with college debt. Sometimes I think they're more expensive than their houses,
right,
or their mortgages. So
I've seen it.
I was just curious on your take. Yeah, you've seen it exactly.
I've seen
so that's why I asked.
Hundreds of thousands of dollars in student loans.
Disgusting.
On people that are have advanced degrees and they're working, like you said, at State Farm as an agent, or which is a good career.
Yeah, for sure.
But or teaching. Like the biggest one I hate is you're teaching kids and you have all of this student loan debt. Like that shouldn't be like.
Oh, you mean teachers?
Like, yeah, like, they get these advanced degrees, which they should have, and they should be able to teach, and they should, without having this hanging over their head. I really feel like that's the spot where something needs to change there. And I don't know if it's the debt forgiveness or whatnot, but some of these programs, I mean, they need to reduce the cost of education. Right. I mean, they're gonna make it to where regular people can't go to college.
Yeah.
And I mean, I'm a regular person, you're a regular person, and we were able to go for a decent dollar, but the cost now is just like, I would hate to have a teaching salary and have to pay back $200. How are you ever going to pay back $200,000 in debt if you're making $75,000, $80,000 a year?
So it's funny. A friend of mine, actually, he was one of our clients. Worst case scenario, I'll just bleep out his name, but Chris and Dana Albrecht. Yep. We helped him out buy a house in Spring Grove, Fox Lake area, whatever. He's a PE teacher with a bachelor's degree. Mm-hmm. Before taxes, he makes $42,000. We met 3 weeks ago. And he goes, how's real estate? So he's in real estate school right now because I showed him how much I made doing this full time last year. I just showed him a full year's, but with the salon and everything, it was kind of part time, realistically speaking.
Of course.
And I made twice as much as he made.
Right.
And he was shocked. And then when he was trying to get a promotion or a raise, they said, you can go back for your master's degree, but it's only going to give you $7,000 more.
And how much is that going to cost?
Exactly that.
Again,
and he's a good guy. Yeah. You know what I mean? Like, we weren't like the closest of friends in high school. Like, we had cliques within one big clique. But, as time goes on, I've gotten so much closer to him, and I just feel bad. It's like,
right. That's ridiculous.
All that time with the degree, and it's, so I don't value it as high.
Yeah.
But,
same.
It's
same. Now, if you have the ability to pay for it. So like, 'cause I see that too. Where I see, young people that are buying homes that did get that college degree and have the good job, and mom and dad just footed the bill for college. I hope to be able to do that for my daughters. Yeah. That's one of my goals, is to be able to say, you know what, here. And in fact, I once heard of a story where, because if the kid has no skin in the game, they're not going to be as likely to take it seriously.
Guilty.
So I had a friend that, it was a friend of a friend, and I don't even know how accurate, but it was along the lines of the parents made the kid get student loans during college, thinking that he would have to pay them back when he graduated, and then for his graduation presents paid the loans off.
Wow, that's cool.
And so that way he had the whole time he thought, I better take this serious because I'm going to owe $80,000 or whatever the number was. And then instead of buying them a car or whatever for college graduation,
Yeah.
they just paid the loan off.
Yeah.
Something along those lines,
cool.
I think, would be really cool to do. And that would be a goal of mine if that's the way that, they end up going.
Yeah.
I hope that they get scholarships, and I hope that, they're both, my older daughter plays violin and my younger one plays cello.
Oh, that's cool.
And so we're like really like pushing them to stay involved in that. Cause like there's a lot of scholarships for musical instruments.
Yeah.
And
I didn't know that until I got older. I always thought that's for nerds. That's lame.
Right.
I was playing guitar, but I didn't know.
Yeah, dude, there's some big scholarship money for, for music, for anything, for acting, for, at our school, they go to Christian Life School in Kenosha. They're really involved in the arts.
Mm-hmm.
So they have sports, and, they have plenty of sports to pick from, but they do these awesome plays every year, like their Broadway musical plays. They do, orchestra. They start them in, I want to say first grade, they start them in orchestra. So, that's what we're kind of hoping, that they get violin and cello scholarships.
Cool,
but in any case, I do value education. But in the right scenario, like for your buddy, I mean, does that make sense to go back and get a master's degree and spend all this extra money?
He told me it's not worth it.
It doesn't make sense.
Yeah.
So
I wouldn't do it.
I feel terrible.
He just had a kid.
Oh, well, congratulations.
So
that's awesome.
Yeah, but now when you have something that dramatic happen, you start thinking differently, And
Value,
again, I'll ask him if I can use
Yeah.
his name or share the story, and beauty of editing.
Right.
But, it's one more thing, and I know you got to go, where you told me your friend said about the student loans and paying them off.
Yeah.
I've mentioned this to someone before where, their kids never went to college and they're just living the same day in and out, not trying to progress their career in what they're doing, whether they know what they want to do, or you could be working at McDonald's. But while you're there, try to move up.
Right.
You know what I mean?
Absolutely.
And they're afraid that their kid's never going to move out. I said, charge them rent. Oh, I can't do that. I love them, this and that. Well, put it in a separate account. And then if you don't want to take their money, there's a down payment for a house, and they didn't know any better.
Right.
I always think it's a great idea.
100%. Phenomenal idea.
Yeah. But
yeah, you don't want to charge your kids. I think
I don't know the feeling.
Yeah, but you will, and when you do, you're going to be like, dude, they're your kid.
Yeah.
Like, and especially like I said, I mean, we grew up with not a lot. My parents struggled, but they were able to build a life and
get ahead. The balance on both ends now.
Right, and so for me now, it's like I got to be careful too, because you don't want to raise spoiled kids either.
Yeah.
I don't want my kids to be brats just because I can afford to pay for, things that they want and things that they need and go on trips and do stuff. And, you got to be careful. It's a fine line, where, you want your kids to know that you're a backstop for them, that you're there for them, that no matter what, that you're, whether it's financial or if, they need money for this or that, like you want to be that, but you also have to be careful that it doesn't, I don't want spoiled brats.
Right. No, yeah. It's,
so
they were a pain in high school. When you see them, I'm
exactly.
Like, girl sucks.
And they don't get far in life.
Right.
If you get everything handed to you and you don't have to work for it, you become expectant.
There's no middle.
And,
it's either they take off there and do great things, or they're just going to suck the life out of something else.
Yeah.
Yeah, that's cool, man.
Yep. So, got to raise them right.
Yeah. Well, I don't know if you got anything else to cover. I know you're on a time crunch, but
yeah, I think I'm good.
I'm just gonna outro you at the end of the day here.
Do what?
Outro you.
Okay.
Like outro.
Okay, gotcha.
Actually, this is funny. I'm just gonna leave this as it is now. But no, thanks for coming, dude.
Yeah, no worries.
It's good to pick your brain. I learned so much, even though I feel like I've known you this
long.
Yeah,
no worries, my man. Appreciate the opportunity.
The only other question I have is, what's next? You've got this huge operation. In a nutshell, 60 seconds. What's next?
Yeah, so I mean, we're just gonna keep grinding. We're at some point here when the rates come down, it'll be go time again. I feel like we're in a little bit of a lull right now. Our industry is always going to be peaks and troughs. Like that. That's just how it is. So we're just right now we're just living to fight another day. We're not crushing any records, or nobody is. Our industry is the lowest mortgage application since 1995 right now.
Wow.
So we'll weather through this storm and hopefully better days ahead of us, and we'll keep helping people, keep, getting out there, getting the names out there, and, just really focusing on offering the best possible service to the most amount of clients we can reach. And, fingers crossed that when rates come down, they'll all come back to us to refinance. So, pretty much just going to keep grinding, man. There's really not nothing else we can do.
Cool.
We'll weather the storm.
Yeah. And then lastly, on a personal note, you're in a lot of things too, like church, and
Yep.
you got your hands wet in a lot of things. So is there anything you want to shout out or put awareness to before we get out of here? Or?
Yeah, no, my father's business, MFB, mfbyouth.org. It's a ministry that I got involved with in 2017. Unbelievable story of detective, Zion police detective, Matt Thornton. He was featured on WGN. Really great story. Look up Matt Thornton. But anyways, I got involved with his ministry, reaching youth in Zion and Waukegan and North Chicago in 2017. We got some exciting stuff coming up. We're working with some developers and some investors to possibly have our own location where we can meet, get the kids off the streets on Friday nights. We play basketball, we feed them, we hang out with them. A lot of fatherless kids in the area. So, and it's right here, close to Northern Lake County. So it's huge on my heart. We really love helping the kids out, and we do all kinds of cool events. And we just had a back-to-school barbecue where we had 150 backpacks with school supplies donated, all kinds of good stuff. So mfbyouth.org, look it up. It's a fantastic organization.